The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we're going to talk taxes for the next hour. So whether you're sitting home waiting for your refund that you still haven't gotten, you've gotten love letters from the federal government, you're wondering about how the tax law is affecting you, maybe you don't have your health insurance and you're wondering about what to do about the Obamacare thing, is there going to be penalties? Whatever your tax issue is, wondering about how to change your W-4, maybe you've sold some property, you're thinking about selling property, give us a call, 803-0930. 803-0930, star 930 on a cell phone. You can text us at, I think, 90930, right?
30930.
Thank you very much. You came to my aid, 30930, and we'll deal with your text. And I was so lucky today. I was able to get Tim Eliason to come join us. Hey, Tim, how you doing?
Good, Esther. Thank you for having me today.
Because Tiffany and Christopher took a trek out to Long Island to see their daughter, who's having a little bit of a adjustment. Let's call it that way. Adjustment syndrome.
We all go through those stages in life, but it's great that they can be there for her and support her and help her make that adjustment because she'll be just fine. Gracie's a great young lady.
Yeah, well, she's a great young lady who doesn't really. She's in a different environment altogether.
Yep.
You know, so Tim Eliason is our communications director at EG Tax, and he's also the president of EG Health Connect. And so exactly, and this is, you see people all the time, every day, about their health insurance. So people, I just had somebody the other day that said, oh my gosh, we have to pay $1,600 a month for our health insurance. And I said, talk to Tim.
Exactly. It's a branch of, and it's part of EG Tax, EG Health Connect, and the slogan, Insurance Simplified. That's what we want to do because there's nothing worse than something that you're going to shell out a lot of money for and hopefully you never need to use, but it needs to be there to fit your lifestyle, especially now that we're starting to do and get involved with everybody with Medicare. People when they're turning 65 and we're approaching open enrollment, those times are tough because what do I need? Am I paying for too much? Or do I have the coverage I need? Now's the time to do, as I tell them, it's time to take inventory. Open enrollment's coming up. You need to decide. You need to talk to your doctors. Look at your prescriptions, things like that. Did the doctor say, well, you know what? I think there's a knee replacement on the horizon. Is that the case? Does my insurance fit it? Is it going to cover it? Is it going to cover my skilled nursing, my rehabilitation, my PT?
And that's really what you do. You sit down with people and you say, you don't say to undress, but you just about do. You say, are you on this medication? What's going to happen? How are you doing with this? And so you really get the insurance to fit somebody's health condition.
Exactly. I was kidding with a gentleman the other day, a pastor I was helping out with something, and I looked at him and I says, I almost know as much about people as you do. So, but, between taxes and finances and stuff, and obviously we have a lot of clients that trust us with their taxes and trust us with things that they come to us with their financial decisions. It's been a natural progression for them to trust us with things with their health care and making sure that they have the coverage they need. And I've been seeing a lot of people recently because now's the time everybody's getting ready to either go to college or back to school, right, and making sure the kids are covered.
And in the middle of the year, if something happens, I just had a doctor that came in yesterday, and she was saying what her health insurance is costing. And I said, and she says, well, I have to go stay on Cobra because I quit my job and I'm now switching to another employer. And I said, not really. That's a special condition.
Exactly.
Right?
Cobra, a lot of people get sticker shock with Cobra because all of a sudden they're going to pay the full premium for what they were paying a portion of through their employer. And all of a sudden they get that first bill and they're like, wow, this is what insurance cost me. Well, depending on what their income sources are after that job loss or the transition that they're making, they may now be eligible through the marketplace for a subsidy or credit to maybe cut that premium in half and make it more affordable with the same level of coverage.
I don't think the doctor was going to get a subsidy.
Well, that's probably true. That's probably true.
But the thing is, maybe she didn't need that level of coverage that the hospital had given because she's a young, healthy woman, right?
Yep.
So that's all of the things that you do. And again, if you have any questions about health insurance, if you have any questions about the penalty for health insurance, by the way, the penalty doesn't go away in 18. This is 18. The penalty goes away in 19.
That's
so
correct.
This year through 2018, the penalty for not having health insurance is still in full effect.
And exactly. And the thing is, too, is right now all the companies, the insurance companies, and we're pretty lucky in New York with the number of companies we have by county that are still involved.
How many do we have?
Erie County has 6. There's 5 up in Niagara County, which is very beneficial. I was helping some clients of ours that were thinking about moving down to the Fort Myers area in that Lee Collier County. Even though that's a very popular, they had 1.
Right.
And the least expensive premium for a bronze plan, and the deductible is going to be $6,000 a person. For the 2 of them was going to be $2,400 a month. That was the premium in Florida.
But that's because Florida never did get on board with the Affordable Care Act.
Exactly.
Whereas New York State was all over this.
Exactly.
Right?
And we have the different levels. Obviously, Medicaid that's always been around, but New York's one of the few ones that have had this essential plan. $20 a month. It's kind of that transition between Medicaid.
And that's so hard for people to get their head wrapped around. You mean to tell me that they're going to get the equivalent of a silver plan for $20 a month?
Actually, it's equivalent of a platinum. They're getting a Cadillac plan for $20 a month. Now, if you really want to go crazy, you could spend $47 a month, and that would include your medical, dental, and vision with, no copay on most things, no deductible.
If somebody's listening right now, who are we talking about that could get this kind of a plan?
Well, it kind of varies. I do a lot of different people. I do self-employed with businesses because obviously, seeing what income comes from if they're an S corp or partnership or sole proprietor, sometimes they think that they have to pay this, huge premium that is a full price because they got to, don't have an employer. They got to go directly to the insurance company. But when you look at their modified adjusted gross income on their tax return, they qualify for things like this. Now, the other people are somebody that's maybe 62 years old and is trying to figure out, well, I'm going to stop working. I'm 62,
right?
And I got to, make this transition. I had one gentleman, we sat and talked, and he had enough liquid assets, if you will, cash that was not earning anything in the bank, that he could stretch it for a year and a half, not take his Social Security, not take his pension. He got $20 a month insurance and
lived off of his savings.
We looked like geniuses because we did this before 2017 when the stock market went through the roof, and he left all that money in there to grow.
Wow, that's great.
So, but it varies. There's a lot of people that this could apply to.
All right. I'm Esther Gullius, the tax lady from EG Tax, and I have Tim Eliason, our communications director. He's president of EG Health Connect. So if you are wondering about taxes or you're wondering about health insurance, this is your place to get some great advice. I will tell you, there are people that are substantially overpaying for their health insurance, and we get how much for doing this, Tim? What do we charge people?
We don't charge anything.
Zip. So this is a free service of EG Tax. Why don't we go to the phones? We're going to talk to Dave from Cheektowaga. Hi, Dave. How can we help you?
Yes, I'm usually late filing taxes because I always get money back. This year, not only I was late, I got hit with a very serious health illness, and I haven't filed yet, even though I've got money coming to me. What's the procedure in filing now?
Just if you're doing it yourself, the TurboTax and everything's still online, or you can call EG Tax and you can come in. We're there 9 to 5 Monday through Friday, and you just give. It's just like tax season. The only thing is, if you have a liability, there's going to be penalty and interest for filing late if you didn't have an extension and pay the taxes up front. If you're getting a refund, you don't have to worry. We just send it in, and they'll issue your refund.
Okay, thank you.
All right. Thanks, Dave. Thanks for calling. And our phone number at the office is 632-7886.
That's correct.
And speaking of refunds, all right, if you've listened to Ask the Tax Lady, you've heard me say many times, don't get a refund from New York State. And for those of you that are still waiting for your New York State refund, you probably even forgot that you had it coming. New York State will play games with your refund, and the first game that they play is right after taxes are filed. They say, could you send us a copy of your W-2s, right?
Any income sources that show up on your tax return, W-2s, 1099s, anything like that, they say, well, we need to verify that this is actually your income, so you need to send us a copy of your W-2 and your 1099s and then wait 90 days.
Right, and that's like 90 days. So now this is their new letter. Now read this, Tim.
Well,
you guys can't believe this.
This is the new letter that just came out, and this is actually an individual that already went through the 90 days.
They already did the 90 days and verified all the information on their tax return.
Yep. And
this is New York State.
And actually it says on here, we cannot refund the request as you have submitted. We need additional information. We also need copies of your W-2s again. We need copies of your last paycheck stub from the tax year that we're talking about. And in addition to this, you need to get a letter from your employer signed by an officer that states what your wages were, what your withholding was, and it has to be on company letterhead.
Signed by an officer.
Exactly.
Now that'll take another 90 days. So this guy's refund that should have been received before the end of probably before the end of April the 17th.
Exactly.
Now it's going to be lingering until January of next year before they issue the refund, because all they're doing is hoping, I think they hope, that you're not going to answer the letter.
Exactly. And they will admit in here, they do say, due to high volumes, allow 90 days for determination.
And the high volume is that they're not processing the returns.
Yep.
And if that doesn't tick you off, it is unbelievable. And I'm going to tell you, all you have to do is change your W-4 at work so that they stop taking out so much in taxes for New York State, especially, because then you're in the driver's seat and you can control your refund so that you might make them a check for $25, $50 rather than sitting around waiting for that refund.
Exactly.
All right, why don't we go to the phones? I'm going to talk to Sandy. Hey, Sandy, how can we help you?
Hi, Esther. I'm calling regarding health care for a 26-year-old.
All right, you are calling the right person. All right, Tim, you're on.
Hi, Tim.
Yes.
He just turned 26, so he's off his parents' insurance.
Mm-hmm.
And he works in Nevada. He works in Florida. His home base is right here, but he does work in different states.
Okay.
He has no insurance because he said the cost of it is so prohibitive.
What, when you say he's working, what is he doing that he's in different states?
He works for the states, usually, on trail building in their forest areas.
Okay, and what is his income? What is his projected income for 18? What do you think he's going to make?
I don't think he's going to make over $30,000.
Okay. The threshold for an individual, the essential plan that we've been talking about, is $24,000. It'd probably go up to $25,000 with that. So if his income is in that area, then that's where the $20 a month insurance would end.
So if he were to put money in his pension plan,
exactly,
he'd get down to $24,000 and he'd call for the essential plan.
Exactly.
Right?
And I meet with a lot of clients and I said, okay, here's what you're going to spend for health care. Would you rather that health care money goes out the door, premiums to the insurance company, never to be seen again? Or would you say, okay, we're going to take $20 and put it towards the insurance, and the remainder I'm just going to pay myself for my retirement and put that money away. He gets to keep it.
Right. So instead of paying $1,000 a month, which is going to go out the door, right?
Yep.
He pays $20 a month, and he puts $6,000 in his own pension plan. So it's a win-win.
Yep. So he needs to call and talk to us so we can exactly, kind of project his income, see where we're at. Because with him being in New York, and New York is one of 2 states right now that has this, so it's a huge luxury for those kids that are 26.
Okay, Sandy?
As long as his income is under $24,000 a year, though, right?
Exactly.
Right.
Exactly. And that's projected. Like I said, there's a lot of things that go into it. Don't necessarily just look at that gross number that's maybe year to date, because there may be some adjustments that he already has as far as what his taxable or adjusted gross income that'll show up on the tax return.
Like student loan interest.
Exactly. And there's things we can make adjustments on it. So it may be surprised how close he might be to that 24.
So tell him to get out of the forest and call Tim, and there's no charge, and we'll kind of come up with a plan for him to get the biggest bang for his buck.
Wonderful, wonderful. And I'll locate Tim at AG Tax.
At AG Tax,
Yep.
632-7886.
Exactly.
632.
Or you can go to our website at egtax.com.
Wonderful. And Tim, your last name?
Eliason, Eliason.
Wonderful. Thank you.
All right, Sandy, good call. And that's really what happens. Many times you can sit down with somebody and actually plan to back them into the lower premium by just moving around some money. And in this case, if he would have had to pay $1,000 a month, which is $12,000, as opposed to putting $6,000 in a pension plan and he still has it, it's a win-win.
Yep. Like I said, if you can keep it in your pocket and not send it out the door, never to be seen again, that's perfect.
Yep, that's right. I'm Esther Gullius, the tax lady from EG Tax. We're going to take a short break and we'll be back with your calls on the other side. Hey, I'm Esther Gullius, the tax lady, and we're talking taxes, but we have a special guest in studio today, Tim Eliason. He is our communications director, but he's also our president of EG Health Connect, and that's a free service EG Tax offers to help you to save money on your health care. And we got into it really because we thought, gee, we have to tell people they're going to have this big penalty. They're not going to like us at all. So we thought, well, we better learn about what the options are for health insurance so we can help people to get the best bang for their buck so we don't have to have them pay a penalty.
Exactly.
And for your information, the penalty is still in effect through 18. So, okay, we're going to go back to our phones and we're going to talk to Lynn. Hey, Lynn, how can we help you?
Hi. I have a son that's 21, and he has type 1 diabetes.
Okay.
I am in jeopardy of losing my job, and he's under my health insurance. What's going to happen to him?
Okay. Now, when you say he's under your health insurance at 21, is he in school?
Yes.
Okay. So he's going to college, and he's part of your... And when you say that you're going to lose your health insurance, is that because of his condition?
Her job.
Or her job? I'm sorry, your job?
Yeah.
Okay, so is it just the amount of time that you're going through taking care of him, or is it because the employer doesn't want to keep him on the health insurance?
No, it's not that. It's just that I'm in jeopardy of losing my job.
In general,
okay.
Right, Lynn?
Well, then we need to talk because there's things that we can do for him for his health insurance. With the new tax laws, sometimes what's working out is the fact that you do no longer have the exemptions. So it may be the case that he can be spun off of the tax return and so that he can still acquire health insurance.
On his own.
Exactly.
Which would be free.
Exactly.
Right.
Now, the other thing, too, is...
But here's the thing, Lynn. He would get free health insurance, okay?
And the other thing for you, too, Lynn, is that there are some things when you go through the marketplace that you can do it based on your current and projected income for the remainder of the year. So even though you may have a loss of your employment, that it's not necessarily based on the entire year's projection. We can maybe put in for something because your income has changed for a certain reason, so we can get everybody in the house covered,
Right.
not just
Yourself.
your son that we're
Right.
concerned about.
Mm-hmm.
Can his father pick him up?
Is his father have insurance on him? Yes. So definitely, if he can put him on his plan and pick him up on that.
But the truth of the matter is, the insurance that the state of New York might give him might be better than his dad's insurance.
Exactly.
Right? So before you just go and say, oh, well, here's the path of least resistance, I think what you should do is call Tim, and we have a number of navigators, right?
Exactly.
And so that they can say, okay, well, Dad's insurance will do X, Y, and Z, but he's got X amount of dollars that has to be might be for the floor, when you have to come up with so much before they actually
The
start
deductible.
paying. The deductible.
Yep, exactly.
Yeah. So, whereas the state of New York might give you such great insurance that is for free with no deductible.
Yep.
So you want to find out what kind of insurance Dad has.
Okay.
Okay, Lynn?
Thank you.
Thank you, dear. Bye-bye. I hope your job is secure. I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on his cell phone. So we got, who else? We got Dolores. We're going to sneak you in before the news. Hi, Dolores. How can we help you?
Yes, I have a question for somebody else plus my own thought for myself.
Yeah.
There's somebody that has some sort of an insurance, low income. Now, I don't know what poverty level is, but I think that may be right in that arena of like 16,000.
That's correct. It's right around 16,000 is the poverty level right now deemed by the federal government.
Okay, and when you say marketplace, are you just talking about a sort of quasi Obamacare thing in New York State? Could you explain that? And could this lady get under that?
Well, in the marketplace, if she's under 65, then she has the ability to go into the marketplace. The marketplace is really, it's that. It is where you can go in, and it gives you the opportunity to look at the plans that are provided by several insurance companies within Erie County or Niagara County or whatever county that you live in, and then it's a calculation of any subsidy or credit that you may get to help you pay that premium.
But the marketplace is through the New York State of Health.
Exactly.
Okay, so where your friend would actually go, Dolores, is the New York State of Health. Mm-hmm. And that's what they're calling the marketplace.
Is over 75, and she can't get a wheelchair. They only want to give her a wheelchair that is motorized, and she doesn't want that.
Now, does she, when we were talking earlier about the poverty level, is her income above that?
No.
Then she should be on Medicare and Medicaid both as,
right.
as kind of working together so that she can get that.
But what about what you had offered before about the dental and eyes and everything? What arena is that? Do you have to work, or are you working, or
no?
Well, once you're 65, it's a horse of different color.
Yep,
right?
yep. That's where you're all in the Medicare, and you have to kind of pursue different options. The dental is a tough one right now. Dental insurance is not real great out there, but there are options.
All right.
But
hey, Dolores, you know what we got to do? We have to take a break for the news. You want to hang on, and we'll pick you up on the other side?
If you like, if you finish giving me the information, you may go, but I'll be happy to hang on.
Okay, great. You know what we're going to do? We'll pick you up while the news is running, okay? All right, thanks, Dolores. I'm Esther Gulias, the tax lady. We're going to be back. We're going to take a short news break. We'll be back on the other side. Hey, I'm Esther Gulias, the tax lady from EG Tax, and we're joined in studio today with Tim Eliason. He's our communications director, and he's also our president of EG Health Connect. And did you get Dolores all squared away?
We got Dolores all straightened away. I'm going to actually talk to both of them at the beginning of the week, and we'll get them what they need.
Okay, great. That's great. And that's really, it's such a blessing to help people, isn't it?
Yes, it is.
I mean, because really it's such a conundrum when people say, I'm paying $200 a week, $800 a month for health insurance, and I got an $8,000 deductible, and it doesn't pay for this, and it doesn't pay for that. And there's a lot of options. If you're paying a lot, before you keep paying that, even if you're an employee, if more than 10% of your income is going to pay for your own health insurance, that's kind of an exception, and you actually would qualify to go into the marketplace. And again, that's part of what we do at EG.
And a lot of times with that transition marketplace, because employers are keeping their costs down, so they're choosing lower premiums but higher deductible plans. So even though that premium's over that 10%, you probably still got a deductible, and there may be something that's a better option for you.
Maybe a big deductible.
Exactly.
I'm Esther Gulias, the tax lady, 8030930, 8030930, star 930, whether you want to talk about health care, and we got the guru here, or you want to talk about taxes. We're here to help you, and we're going to go back to the phones, and we're going to talk to Karen. Hey, Karen.
Hi. About 4 years ago, we always ended up owing the IRS money.
Okay.
But then a guy that helped us with our taxes said we might end up paying a penalty. So I had my husband up what they were taking out of his checks. Now, is that the case, or?
What the penalty that you're talking about, was that for not having health insurance?
No, the penalty for not having enough money out of.
If you owe more than $1,000 to the federal government, all right, at the end of the year after you get to your tax liability, then the federal government has the right to penalize you for failure to pay estimated payments, because it's a pay-as-you-go system. As you earn the money, you're supposed to pay your taxes. But if your liability is less than $1,000, there is no penalty. Or if the liability is over $1,000, but that liability is actually more than last year's withholding, then there's an exception to penalty. So there's a way to get around it. But basically, Karen, it's a pay-as-you-go system. So you do have to prepay your taxes as you earn the money. And if you owed more than $1,000, there would be a penalty.
Do you know what the penalty would be?
Well, the penalty it actually fluctuates every year. It's based upon what the prime interest rate is. I think it's around 4% right now. So it's not a gigantic figure, but it's definitely it's an additional amount of money that you have to pay.
Yeah. Okay, thank you.
You're very welcome.
Bye.
All right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We got Joe from Lewiston. Hey, Joe.
Hi, Esther. Question.
Yeah.
I won $6,000 at the Niagara Casino this past year. When they paid me off, they didn't take any federal or state tax.
Mm-hmm.
I know I'm responsible for it now, but how can I overcome putting it in with proof that I lost X number of dollars?
Well, are you are you like a member of the casino? I mean, you have one of those little plastic cards, a gaming card?
Yes.
Then at the end of the year, you can pick up a win-loss sheet that they're going to be tracking, Joe, how much you spent on the cost of gambling and all of your jackpots as well. So that win-loss sheet is going to tell you how much you won and how much you lost. The losses are going to be an itemized deduction up to your winnings. Even with the tax law change, that's still an itemized deduction.
And there's some new rules too about things about gambling that he can add to. So,
like for instance, if you went to Vegas and you won money in Vegas, or even let's say with your $6,000 in gambling winnings, let's say you had no losses because you're just really lucky, but you went to Vegas and the cost of going to Vegas was $2,000. They're going to let you take the cost of going to produce the winnings up to the amount of winnings that you've won as an itemized deduction this year under the change in the tax law.
One more quick question: are the money out of pocket for medical, is that deductible?
It is. It is still deductible. There's the 7.5% threshold on the itemized, but as Esther's talked about and stuff, that's one with the higher itemized deduction. It's going to be a tough one. But it is still deductible. You should still keep track of it. Esther and I were talking the other day where we've been talking with clients. Just because everybody thinks with this higher standard itemized standard deduction that you're not going to be able to get to do these itemized things, you still need to keep track of it. You just don't know. I mean, there may still be some changes. There may be some changes coming from New York State in the way they handle itemized deductions. Keep track of that medical. It is still deductible, so still keep track of it.
Right. Okay, Joe?
Thank you, Esther.
You're welcome, sir. Bye-bye. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on cell phone. And we got the insurance guru here from EG Tax. He's a navigator. He's our communications director. He's also the president of EG Health Connect. And our job at EG Tax is, because we really don't like to tell you bad news. It's a really not fun thing. I could have never been a doctor until told somebody, oh my gosh, you got cancer, because that's horrible. So we did everything to head it off, and Tim kind of picked up the gauntlet, and he became a navigator for New York State, and so he knows the ins and outs. And part of what we do as a free service to our clients is that we help you with your health insurance. And there is things out there. I'm going to say free insurance. Now we all know nothing's free.
Exactly.
So it's all being spread across the population of New York State, obviously. But there is, through the marketplace, many people will get no-cost health insurance. Then there's the $20 plan.
The essential plan.
The essential plan.
Exactly.
There's all kinds of things. And we want to help you. So if you have any questions, if you have high health insurance, this is the time to get some great information. Our phone number here in studio is 8030930. 8030930 and star 930 on a cell phone. And we're going to go back to the phones. We're going to talk to Linda. Hey, Linda.
Hey, how are you?
I'm good.
My call. I had a question for Kim.
Yes.
Yeah.
Go ahead.
Hi. I'm 62, and I'm thinking of retiring at the end of this year from corporate America. I have horrible insurance for my husband and myself. I'm not paying a lot for it, but it's a bronze plan, and it's really high deductibles.
Mm-hmm. Yep.
What I'm thinking when I retire is that I'd like to start a home business of helping to coach people in career decisions.
Oh, great.
It would take a while to get that started, and I'm not looking at it for massive income. I'm looking at it, for something extra to do once I retire.
Exactly.
I'll be 63 in February. So the question is, I have a fair amount of savings. My husband is self-employed. Would we be able to take part in the essential plan? I'm probably not going to make a lot next year. I'm going to be setting up the business and getting a few clients, and probably the following year I'll be making more.
Exactly. That's the perfect client for that and you're really in a perfect position because, making that step from retirement prior to 65 and trying to get to Medicare at 65. And I even have clients that I do this with, what we were talking about with the $20 plan you're talking about. They get to Medicare and they're going, no, I don't want to go into Medicare.
I don't want to. Please don't let me
please don't make me take that. I'd rather keep my $20 a month
Right.
insurance. It's much better. But yes, you are, being self-employed, like you said, with your income and the way things work on your tax return. You talked about your savings, things that would not be reported as taxable income.
But of course, her husband's income all plays into that.
Yep,
right?
but he's self-employed too, so
Right.
it may be the case that his insurance after expenses on his self-employment. So we should definitely sit down and talk so that we can run the numbers for you and say, here's where we're at. For a household of two, that number that we're talking about for the essential plan is roughly $31,000 to $32,000. So that's our kind of our number. But again, because like Esther talked about earlier, if it's the case that there's employment, there's always SEP and Simples and stuff for self-employed people to back themselves into that insurance by setting aside for retirement.
So you really got a plan.
And one other question, when you're starting a home business like that with the changes in the tax law, and if you were renovating a room for the business, if you were doing, getting a computer, whatever for the business, is any of that tax deductible?
Absolutely. Anything that's ordinary and necessary for you. If you're an employee, no. If you're self-employed, yes. So I think this is really where people are saying, it makes no sense if I'm an employee. I can't take my expenses. No. It's bizarre. It is absolutely bizarre to me, and I think somebody should challenge it in court, but that doesn't answer your question. But if you're self-employed, yes, you can still take office and home, your travel, your liability insurance, your computer, your internet, your cell phone, your pens, paper, pencils, all of that. Anything that's ordinary and necessary for you to produce your income.
And it's a perfect year to start, 2018, because of the new pass-through with that 20%.
Right, there's a 20% deduction on the bottom line as well.
So if we were going to buy some things and start getting ready for the business, we're better off doing.
Yeah, but let me just caution you this Linda. You don't want to say, gee, I talked to a lady on a radio and I think we should do this. What you should do is come in so we can talk to you. There's no charge, but this needs some planning, not just a conversation on the phone.
No, I get it.
Okay?
Sure. Well, thank you.
Thank you, dear. Thanks for calling.
Thank you.
Bye-bye. And let's see, we're going to talk to Debbie. Hey, Debbie, how can we help you?
Hi, I'm calling for a family member who is separated from his spouse. The spouse lives in Texas. He lives in New York. Her income is high, and he was trying to get health insurance, but because they're still legally married, even though they haven't lived together in over a year and she's in another state, he didn't qualify for any of the New York State programs, and his income is low.
Is that correct?
That's correct. You if they're separated, there's a way the application has to go through. Even if they choose to do married filing separate, it takes a lot of the benefits and the subsidies and credit off the table, unfortunately.
So what if he did a legal separation?
If it was legally separated, then yes.
So that's what you need to tell your friend is go get a legal separation.
Okay.
All right.
Thank you.
All right, thank you, dear. Bye-bye. I'm Esther Eliason, a tax lady from EG Tax. We got Tim, the health insurance guru, here in studio. You can call us with tax questions because he's also a really smart tax guy, or wondering about what to do with next year's tax liability. If you have a question, you give us a call, 8030930, 8030930, star 930 on your cell phone. We're going to take a short break. This is WBEN. We'll see you on the other side.
Just like the one-winged dove sings a song, sounds like she's singing.
Who? I can do who's. I'm Esther Goliath, the tax lady, and we're talking taxes, we're talking health. We got our special tax and insurance guru, Tim Eliason in studio with me. Chris and Tiff are off seeing their daughter in Long Island. But we're helping you, 8030930, 8030930, star 930 on your cell phone. And if you don't get us today, because we have a number of calls waiting, you can call Tim at the office, 632-7886.
Exactly.
Our website is egtax.com. And I'm going to tell you, this is an absolute free service that EG Tax provides because, like I said, back in the day when they were doing all these penalties, we just didn't want to tell you had a penalty. And we thought, gee, we better learn how to get people insurance so that if there's a way around the penalty, we will do it. And that's part of how we do everything. We want to help people.
Exactly.
Right, Kim? Okay, let's go back to the phones. And we have John, who's been waiting a long time. Hi, John. Hello.
Hello.
How are you, sir? What can we help you with?
Yeah, could you tell me on a $22,000 taxable income, what is the percentage I'd have to pay this year?
Okay, so $22,000 taxable or $22,000 total?
Taxable.
So this is after your deductions?
Yes.
So you have income of more like $50,000?
40-some thousand, yeah.
And you're a married gentleman, correct?
No, single.
Single. So your tax you're going to be taxed the first level at 10%, then the next level at 12%. So you're probably looking at about 11% blended there.
11%.
So $2,200.
All right. Well, the other question I had, I'm a senior, and my standard deductions last year when you did my tax for me came out to almost $12,000.
Right.
I understand that the new one is only going to be $10,000.
No. The new one is $12,000 if you're single, plus the extra like $1,700 because you're over the age of 65. So it'll be more like $13,500, $13,600 for you, but you won't get a personal exemption. That's all you'll get as a standard deduction.
Okay.
Or itemized deduction, whichever is better.
Yeah, so it'll be pretty much the same as it was last year then.
Pretty much.
Your income will be taxed
and,
at a low rate.
And the rates dropped about 2% in your situation.
When does that amount go beyond these 12%?
12% is at $38,000
right,
for a single?
Like that.
Yeah.
That's on taxable income, not...
That's on taxable
That's
income.
correct.
Right.
Okay.
Okay, John?
I appreciate it.
All right, thank you, sir. Have a great day.
You too.
All right, bye-bye. And we're going to go to Dave. Dave in Buffalo. Hi, Dave. How can we help you?
Hi, how you doing?
Good. What's new?
Good. Just a quick question.
Yeah.
Married, my wife's not working this past year at all, and not insured, obviously, when she left the company. I'm insured through the company, and I don't know if she can apply for the state aid, for the state tax or state insurance, or is it because it come to home income, like total income? How does that?
It would be. It's based on the way the application process works on. It's not necessarily who lives on the roof, under the roof. It's what's called the tax household.
You want to live on the roof.
On the roof, yeah, fiddler. But it's who is as part of your tax household. So if you guys are a tax household where you're on the same tax return, then your income will also be counted for what she qualifies for.
Okay.
Now, do you make a substantial wage, Dave?
It's like in the 60s.
All right. And your wife has no health insurance at all?
Right now, currently, no.
And is just the two of you on the tax return?
Yes.
Okay, so no children or dependents?
No, 2 dogs.
And you don't want to put her on your insurance through work?
Well, it's crazy expensive, and that would blow our household budget.
All right, so let me ask you this: how much do you contribute each month towards your own health insurance?
It comes out it's like 100 and something weekly.
So about $400 a month?
Yeah.
Okay, that would be under 10%.
Yep, exactly.
Yeah.
And with that income, you're not going to have a lot of options as far as subsidies. Does she have a lot of medical needs?
Not at the moment. No, just some. No, not.
And she's not taking a lot of prescriptions or anything like that. Maintenance prescriptions or anything.
Right, but we're just handling that out of pocket, out of the...
Yeah.
Okay.
Right.
Yeah, it's, you're kind of between a rock and a hard place. I'd love to talk to you and at least present
Now,
the
what
options.
would happen if they filed married separate?
Well, again, when you do married separate, all the
It's still
subsidy,
gonna-
she's
still gonna-
paying full premium. There's no subsidy
Yeah,
or help.
and we don't
That's
want
another
you to
plus.
get a divorce, Dave. Even though under the new tax law, getting a divorce is a much better thing. It's a sad thing, but it's true. But yeah, give Tim a call. If there's a way to skin a cat, he will figure it out.
Yep, because we can maybe do a combination, find something that would at least create a safety net for her that she has coverage. It may not be the best coverage that you would like.
Kind of a catastrophic plan.
Exactly.
Okay, Dave?
Perfect, thanks.
Thank you, sir. Bye-bye. Let's see. We're going to go to John in Depew. Hi, John.
Hello.
What's happening?
I've got an easy one for you.
All right.
Person, sole proprietor, DBA. I was always under the essential plan. And last year I had a one-time short-term capital gain that I used to purchase a vehicle. And even after the IRA contribution maxed out, I was still a couple thousand over for the essential plan. And they're giving me a $396 credit toward any plan. And I don't know if I should just suck it up for a year and go with the gold plan, or if there's any other thing I can do to my tax return for 2017 that would just bring me under the 2,000 that I'm over. And that was it. That was my question.
Well, so is this a transition that happened during 2018 for you?
No,
17.
On my 2017 tax return, I'm
17.
Okay, yeah.
So
then
18's different, though.
Yeah,
Completely
exactly.
different.
So 18, if that was an occurrence that you had all that extra income in 17, everything that's done through the marketplace and that application process is based on our best guess projections, what we think that tax year is going to look like. So you should be able to try to qualify for the essential plan again based on your 18 projected income.
Right.
Which means that I got to come in and make an appointment with you.
Well, I mean,
exactly.
To save the money, you don't have to come see us, but I will tell you, it's a free service, and Tim is phenomenal.
If you got that extra $280 a month and you don't have any plans for it, then we can talk too. But if I can save that money and keep it in your pocket, I'd be happy to do it.
The thing is, it's a one-time event. Normally, with my mileage deductions and all of that, I'm always under. And, being self-employed, I have no idea what my income's going to be. And then,
But again, John, it's a projection.
Yep. So yes, we have to use some historical things to substantiate what we're doing. But if we can justify that was a one-time and it's not going to show up in 18, then we should be able to get you back where you were.
Okay.
I can make an appointment, get in there, and I can do it all before my August 31st deadline, right?
Yep.
Exactly.
We'll do. I'll call Monday. Thank you.
All
You're
right.
welcome.
Thanks, John. And our phone number to get a hold of Tim is 632-7886. Okay, and then we have, coming up, I just wanted to let you know on Ask the Tax Lady, we have, for those of you paying big property taxes and you think, oh my gosh, I don't know what to do. Believe it or not, we had a situation in the office this week where somebody had a problem with property taxes. They were paying $40,000 in property taxes, and so we got a specialist to help us to whittle it down. And the projection is that the tax bill is going to get cut in half because the assessor there was a change in use. And so this gentleman that we used helped to get the tax burden for property taxes lifted. And he's going to be a guest in the next couple of weeks. His name is John Gribner. And I will tell you want to make sure that you listen to that show too. And the other thing is we have a real estate specialist coming in, I believe, next week, who's going to be talking about how to effectively sell your property for the biggest bang on your buck there too. So that's something. Those are two shows coming up. But in the meantime, we have Tim Eliason here. He is our communications director, and he is our president of EG Health Connect. And if you need the best health insurance, this is a free service that EG Tax offers, and we're very happy to help you. And in the meantime, we're going to go to Pat in Tonawanda. Hi, Pat.
Hi. I, too, have a question. I had a sale of stock that created a big difference in my income for 1 year. And when I spoke with Tim, it's going to also affect my Medicare payment.
Mm-hmm.
Now, I'm in
Irma.
the process of trying to become a resident of another state. what am I going to do in January for health insurance?
That's a real problem, is it? New York State is in the boat with health insurance, I will tell you, because, we are the number one tax state. And so as a result, they give lots of bennies to their residents if you qualify. Other states, not so much.
Exactly.
Are you going to Florida by any chance?
Yes, I am.
That's a tough state.
Yep, that's in the healthcare options. Now, how old are you?
78.
Yep. So, you're in that Medicare, and what you were talking about is that extra, you got hit with IRMA because your income, and they took your Part B and raised your premium.
You said, yes.
Yep. And unfortunately, that's what they do. It is a one-shot deal. But, come January 1st, it goes away because that was an occurrence within 18. So the meter will go back to zero. But, we can help you out.
So that'll be next year. It'll go back for her, right?
Exactly.
So then she'll get preferential treatment. And when are you leaving, Pat?
Well, I'm in the process of becoming a resident now. That's, hopefully I can prove that I've been a Florida resident long enough this calendar year to maybe affect some of my tax liability for my 18.
No. So I'm talking about your insurance, your health insurance. Are you talking about taxes, or you're talking about your health insurance?
I'm talking about I called about health insurance.
Okay. So why would you want to get to Florida sooner then?
For tax liability for this year.
No, but do you have a large tax liability?
I will have, yes.
You will.
Of the one event that took place in this calendar year.
Okay, well, but so you were a victim of the hurricane?
No.
No, okay, something else.
I sold stock this year.
Oh, okay, it was sale of stock. Okay, well, I will tell you, if you sold the stock when you're a resident, it's still taxable to New York State.
Well, I'm hoping that I have been in Florida long enough. I'm back for the summer, but
Oh, I see. I gotcha. Well, I will tell you, even if you are a non-resident and you had income that was earned while you were a non-resident in New York State because you were here, it's still taxable to New York State. So, Pat, you better get back to Florida. Okay, dear?
And do I get insurance in January there?
Yep.
Yes.
Okay.
Okay,
Yep.
Dear.
All right, thank you so much.
All right, I'm Esther Golias, the tax lady from EG Tax. Hey, Tim, thank you so much.
You're welcome. It was enjoyable.
It was a lot of fun. If you need the best tax or insurance, give EG Tax a call. Ask for Tim Eliason. Until next week, I'm Esther Golias, the tax lady from EG Tax. Thanks for listening. Bye-bye.